Hello, what's up traders? It's Clarkson Trades, the hybrid trader. In today's video, I'm doing a complete breakdown on how to identify support and resistance zones on the chart and also how to trade them. This has been a strategy that most big traders and hedge fund traders have been using for decades, and it has made them millions of dollars. So come with me on the chart. If you are a beginner, this is the only video you need to watch to learn how to draw support and resistance zone and to know how to trade them properly. And this is also the strategy that I trade. So come with me on the chart. Let me show you how to trade them.
Let's start with the definition of supply and demand zones or resistance and support zone. You can either call it a resistance zone or a supply zone, or you call it a support zone or a demand zone. Supply in the sense that the market will always sell, and demand in the sense that the market will always buy. The first thing you need to know about resistance and support zone is that they work on all time frames. They work on all time frames, but the higher the time frame, the more likely. So, like I said, the higher the time frame, the more likely it is to hold. Knowing fully well that it works on all time frame, it depends on you as a trader, what type of trader you are for, and what time frame do you do your analysis. But have it at the back of your mind that support and resistance zone works on all time frames. The second thing is that these are simply zones that the market have reacted to in the past, and as technical traders, we know that the market is likely to react to these same zones in future. Support zone is always down, or you can say is a floor level, while resistance zone is the ceiling level. So you likely find support down and resistance up like this. So you can call this a floor, you can call this a floor, and you can call this a ceiling. Now the ideology of support and resistance level is that if the market gets to your support zone like this, or we can call it a demand zone, is going to bounce off that zone because buyers are on that support level, or we can say there's a strong buying pressure on that level, preventing prices from falling lower. So it's going to bounce off, and if the market should get to your resistance level, it's going to also what sell from that level. It's called resistance or supply zone because sellers are lying in that level and they always push prices down, and they also act as barriers preventing prices from what moving up further. So this is the ideology of support and resistance. Support level is down, resistance is up, acting like a ceiling, while support acts like a floor. And price should always bounce off that level. The more they touch this, the stronger that zone. The more they touch it, the stronger that resistance to that support zone. So because this market has reacted 1, 2, 3, 4 times here, it makes this zone very strong. And because it has also reacted here multiple times, it also makes this zone very, very strong. And like I said, the higher the time frame, the stronger the zone. So if I drop a support level on a 4 hours time frame or on a 1 day time frame, is very, very strong, and the market will likely respect that level if it comes back, if price should come back to that level. Unlike the 30 minutes, the 15 minutes, the 5 minute time frame, market might likely destroy that level. It might not likely react to that level as on higher time frames like the 1 hour time frame, the 4 hours time frame, or the 1 day time frame. So these are just key things that we should keep in mind before we get started in this. Now, like I said, resistance is up and support is down. And how do you spot a resistance level? You simply look at past market chart or market structure, screen your chart, look at what has happened in the past, where has price reacted, and where did a selling pressure get into the market or a high get into the market. Like this, we have this high here. This is one high that price came to this level. This is around 1.3600, came to this level, and sellers push prices down. Sellers push prices down from this point. Buyers push it down at this level. You can call this a support level. Push prices down from this support level back to the resistance level. And because we have had sellers here where they push these prices down, so the sellers are still active in this zone. You can call it a resistance zone. So these same sellers are now pushing these prices back downward. And the logic behind this is that if the market should get again to this level, sellers are more likely to push the prices down again to the support level. So because the market has reacted the first time here, the second time here, and sellers has pushed these prices down, you can now draw a resistance zone. We can call it a ceiling or a point in price where we experience selling pressure or is a supply level on the chart. Now, how do you draw this resistance level? Simply come on your toolbar. This is a first, second, third, fourth, fifth, sixth, and you click on this small arrow icon you see here and go down to rectangle. Go to rectangle, click on rectangle, and you have a zone like this. Now it should touch the peak, or you can see the highs. It should touch the highs of that zone, like you see here. And it's very important you know how to draw this resistance zone and support zone. It has to touch these high points here. It has to touch these high points here, and you have a good zone. It has to touch this high point. You can see one touch and second touch, and this is a very good zone. So this level is acting like a resistance level. It's acting like a resistance level. You can call it a resistance zone. Made a mistake here. You can call it a resistance zone or a supply zone and it's called a supply zone because sellers are lying in this area. And because we have seen that the market has reacted to this level once, second time, and if the market should sell because it's already selling and get back to this level, it's always going to bounce off from this level again because that is a resistance, which is ceiling, preventing prices from going, to go further or to increase. So that is how to spot a resistance level. It's always up. Now the second is the support level. Like I said, resistance is a supply while support is the demand level. Now let's start with this. This is a 4 hours time frame and this is GBP USD. Now let's start with this. Look at areas where market has reacted to in the past. We have this level here, 1. Look at the areas where the market has reacted to in the past. We have 1 level here, 2, 3. So you can clearly see that this is a very, very good zone. This was at first a resistance level that became a support level. Now, what do I mean by a resistance became a support? If price breaks above your resistance level, it automatically becomes a support level. I'll explain that. Now you can see that the market has reacted here first, second, third, and we have also another reaction here. And if we should increase this zone up a bit, you see that, okay, let's take off this touch. You see that the market also reacted here. So we have 1, 2, 3, 4 touches on this particular zone. Now this is how to break down your chart. Very easy and very simple. Keep everything easy. Keep everything simple. This is how to break down your chart. Draw your support zone and your resistance zone. Now let's assume that prices were still around this area here. Now let's assume that prices will stay around this area. And we have had this first touch here, and sellers step into the market and push prices down, came back again up. We have another touch there, sellers push the prices down. Automatically we have a zone there called a resistance zone. And where is our support zone? Like I said, resistance is up, support is down. So our support zone here should be a price point where market has also been bouncing off multiple times, like this point here. Also a price point where market has been bouncing off multiple times. You can see we have a level, a touch here. We have a touch here. Sorry for that. We have a touch here. We have a reaction here. We have a reaction here. We also have a reaction here, right? Price has been bouncing off this level. So this is a support level because it's down. Like I said, support is down, resistance is up. Support down, resistance up. So this is a support level. A support level is simply a point in price where the market faces buying pressure, preventing prices from falling further. So buyers step into this market here, push prices up, sellers push it back down, buyers push it back up, sellers push, just like that. And we have a support layer here, a very strong support, and we have a resistance here, a very strong resistance. So market break this resistance level to the upside, and it's very easy. If market should break your resistance level, what should you expect? You should expect a break and a retest. Let me just do it here. Let me just explain here what I mean. Now let's take for example, this is our resistance zone. Let me put arrow there. This is our resistance zone, and this one down here is our support, and this one down here is our support. Now let's say this is price is in our support zone or our demand zone, meaning that there are buyers present at support level. And the first thing that comes to your mind when price reach your support level is that you need to look for buying opportunities because there are buyers present at that level. So buyers push these prices up and pushes up to the resistance zone where they are sellers. So what will happen? Look for selling opportunities because sellers will push the prices down, buyers push it back up, just like that, until we get a break. Once we have this break here, like this, what will happen is telling you that market has shifted, or the market has changed character. So the market was consolidating in that particular zone where we have buyers and sellers, and market has break above resistance. So this resistance zone becomes a new support zone. What do I mean? Market has break to the upside, came back down and retested this resistance level. So this was our previous support, which is still a support zone, and this was our previous resistance zone. Now once market breaks it and retests back, it becomes a support level. So here's something like support becomes resistance. This is a practical scenario. Price breaks it here and becomes a support level because now it is down and we have a new high here where sellers might be lying there. So after breaking this, you can now see something like this happen, something like this. You can now see something like this. You can now see something like this. So you have this now like a support level because it's acting like a floor. Remember, support is a floor level. It's now acting like it's floor level to this current price. This is a current price here. It's now acting like a support level to this current price. Why? We have a new resistance level which have been created where we have selling pressure, and this should be up here because the market has reacted here once, sellers push it back down twice, and the third time. So you have this new level here acting like a support, like a resistance level, because you can clearly see that they were what? They were sellers in that level pushing prices down. So this is the logic. This is the logic. If price should break above one of these zones, it's always going to come back to retest, and once it retests, that's supposed to become resistance, or that resistance becomes a support level. And this is an example of exactly what we are explaining here. What happened? This was our support level, and this was our resistance level. Now price breaks above this resistance level and came back to retest this level like we have here the first time. Let's go now to a lower time frame, like the 1 hour time frame, to really see that retest. Now you see how price break this level. First of all, consolidated, break the level to the upside, break it to the upside. After consolidating, we can say ranging, break to the upside, and we created a new resistance zone. So since we have a new resistance, this former resistance now becomes a support level. Came back now to test back our support level where buyers are lying. So because price has break above that resistance level, it becomes a new support level, because we are going to have a new high, and that high is going to act like a supply zone or a new resistance zone. Like we see here, we have price reacting here and price reacting here. So price break this former or previous resistance zone, give us a new resistance, so this becomes a support where buyers are lying, came back, retested the support zone, buyers push the prices back up, and now you can see now sellers pushing these prices back down. So this is just an example of when price breaks above your support level, what should you be expecting? That support level or that resistance level, let's start with resistance. The resistance level becomes a new support, and same goes for the support level. If price should break below this level, let's say price break below this level, let's say from here price traded down, breaks below this level, is going to come back to retest, and this was our previous support level. It now becomes a resistance because it's going to be up while we are going to have another supply down. Don't forget, resistance is always up and supply is down. So this was our supply level, and as price has breaks it, comes back to retest, and this retest now makes it automatically to become a new resistance zone, because this is a high and this is a new low that the market has created. Let me show you. This is the new low that the market has created. So what is more likely to happen? Sellers are lying here, and they're likely to push this price like this. You can have something like this until you get another break again, retest, just like that. So that's the logic behind support and resistance level. When market gets to that level, it's a good key point of interest, because if it gets to your support level, you know that buyers are lying in that zone, and you can look for buying opportunities. You don't just jump into the market because you know that if market gets there, is likely going to buy. You also look for confirmations, like candlestick confirmation, something like a bullish pin bar, bullish engulfing, a hammer candlestick on your support level, where it's going to show you that buyers are stepping into the market, or something like a chart pattern, like a W, you can say double bottom pattern, head and shoulder. There are so many reversal patterns that shows you that this support level is going to hold, and you can now look for a buying opportunity. And if the market should get your resistance level, which is the supply level, you can now look for selling opportunity based on confirmations like candlestick confirmation, chart pattern confirmation. And if price breaks above that level and close, if price breaks above this your resistance level and close bullish, then you should wait now for a pullback to go long, because it's simply telling you that market did not react to that resistance level, and that resistance is going to become a new support level in future. So this is just like a textbook way to explain this, and I'm showing you practically on the chart how this actually plays out, and how you can see them every day on your chart. It keeps on happening again and again and again, and this is technical analysis. We just look at what has happened in the past and know that this thing that has happened is going to repeat itself back in future. This is a very simple trading strategy that you can use if you are starting out trading, and you is what I use actually till date. Is what I use. Support and resistance. I'm keeping everything very, 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 very simple. And like I said, you can see, so now we have support here, resistance, market breaks up, give us a new resistance, and this becomes a support. So we have support, so we have buyers here. So if price should come back to this level, so if price should come back to this level, what should we be expecting? For market to bounce back to the upside, because there are buyers present in this support zone. So price should bounce back to the upside. But if that doesn't happen, how would you know that price will bounce back? Look for confirmation. You don't just jump into the chart because you know that that's the support level and price will bounce back. Look for confirmation like candlestick, chart passing confirmation to tell you that buyers are in that place and they are stepping into the market. But if price does not bounce back and you see a quick break of that zone to the downside, then that support level automatically becomes a resistance zone, because you are going to see something like this. Market will break, close below it, come back to retest it. So giving us this retest, this is automatically in a resistance zone because we have a new low and now this becomes a high level. So this is the logic behind support and resistance. And how do you know how to draw it? It's very simple. Let's take something like this. Let's say this is a current market structure. We have something like this. We have something like this. Let's say market is in an uptrend. Okay. Let's do something like this. Okay. Okay. Now, let's say we have a market structure like this. How do you draw out your zones? How do you draw out your zones? Now, first we have a clean support level here. We have a clean support level here. You have a clean support level here because we see that buyers are present in this zone, or you can say demand level, where buyers have pushed prices up here, push prices up second time, and you can see that the third time is still what happening. They are still pushing prices up. So if this was a live chart or a live market and you see price getting back to this zone for the third time like this one, you are more likely to take a buy position here because prices, you know that buyers are present there and they are going to push these prices up. Now the second zone we have on this chart is actually this zone here, which was previously a resistance level acting like a sell or a supply zone, pushing prices down. Pushing prices down. So this was a resistance zone that pushed prices down. Market breaks it, came back to retest. It becomes now a support level, holding prices from falling down or from going down further, from selling. So it becomes a support level where buyers are present to push prices back up, and we see it here. And since price breaks above this resistance level here, it gave us a new high that we can call it a resistance level or a supply level where sellers are present. So sellers push the prices down, buyers push it up, down like this. Market breaks again. This now becomes a new support level, and we have now a new zone here created. You can call it a resistance zone where sellers are present to push prices down. Are we there? Push prices down, buyers push it up, sellers push it down, break this zone. So this was a support zone at this point because you had buying pressure here, right? And market has reacted here, and here. So as the market breaks this level to the downside, this support becomes a new resistance or a new high because market gave us a new low just at this same level. So this is simply telling you that market will always react to this zone, and if it has reacted in the past, it's always going to react there. And that's why when you see look at someone's chart, you always see these zones. It's either they draw it with this rectangle, or you can, if you are experienced, you can just have a line there like this. You can just have a line there. and you know that that line is either a support or resistance based on your analysis. You can have a line there, or you can use a rectangle to draw. It's the same thing. It's the same thing. So this is actually just to tell you that market will always react to this zone. So when you draw your zone, know that we are technical traders, and in future market will always react back on this zone that we have drawn. And to actually be on the safe side, if you are trading support and resistance, follow the trend of the market. It's very important you follow the trend. If the market is buying, look for buying opportunities, and if the market is selling, look for selling opportunities. And how do you know that? Let's take this off and have a practical, scenario on how to trade the market. If the market is buying, how to trade from support and resistance. We all know that you sell from resistance because it's a supply zone, and you buy from support because it's a demand zone. So if the market is in an uptrend like this, giving us series of higher highs, higher lows like this. Now, how do you identify your key levels or your support levels? Now, because we know that the market is in an uptrend, the first thing that comes to our mind is that we should be looking for buying opportunities. Trading is very, very, very simple. And if you keep it very simple, you tend to make more money from trading than complicating all these things with the same concept, calling it ICT, all those things. Keep trading very, very simple and you make money. Now, how do you know that the market will actually know this is a good point for me to place my buy trade? Now, this is an uptrend. If you know how to draw a trend line, you can have a trend line there. And you must not actually necessarily also have a trend line there, because this area of trend line might act as a point of interest, or where you might place your buy trade. Since it's an uptrend, you might decide to place your buy trade from this from these lows we have, from these points of touches. Now that's how to trade trend line, and you can combine that with resistance, with support if the market is in an uptrend. So let me show you something. Let's take out this trend line. Now, if the market is in an uptrend like this, and the market gives you a new high, this high becomes a zone. This high becomes a zone. Market give us this high. So you can call this an impulsive move. You can call this a correction move. So impulse, correction, impulse, correction, impulse, correction, impulse. Now, this high that the market gave us was acting like a resistance zone that pushed these prices down, and you can map out this zone like this. Now, knowing fully well that market has break this zone to the upside, and this distance becomes a new support. So market is always going to come back to retest this support, and this is a level where you want to place your buy trade. You see, this is a level where you want to place your buy trades. Yeah. And put your take profit just before that recent high there. You might want to place your buy trade here, and put your stop loss just below this support level. So support level also helps you to know how to set stop loss and take profit. So you can place your buy trade there, and the same thing goes for this. If the market breaks this new resistance zone here, it now becomes a support, and you wait for price to give us a correction move, and you can place your buy trade from this level and buy. Same as if the market is in a downtrend. Market is in a downtrend, you just simply trade from support, from resistance, from resistance level like this. Trade from resistance level. So this is a downtrend. This is a downtrend. Have something like this. Market. Now, this is a downtrend. I should be looking for selling opportunities. The market gave us an impulsive move, correction, give us a new resistance here, give us an impulsive move. Now, this one becomes a support. This was a support level that pushed prices up, and because prices came back, and break this support level now becomes a resistance. So all you have to do is that once price breaks this support level, it becomes a resistance, and you need to wait for price to pull back here, and this is a best place to place your trade, your selling trade. So this is how to trade support and resistance, and also how to really understand them. So this are just this is just a practical example we have on this chart, and we see it. This is a 4 hours time frame. Another thing to take note is that you can have major zones on a higher time frame like the 4 hours time frame, but you have smaller zones on smaller time frame. But the one on the higher time frame will always, most at time, most likely respect than that of the lower time frame. So you can have a key zone on your 1 day time frame, on your 4 hours time frame, and have a minor zone on your 1 hour time frame. Get. So if you go to on your 1 hour time, you realize that the market also has been reacting to some points, but it's not that strong like that of the 4 hours time frame or the 1 hour time frame. Like you see here, the market has reacted here, and here. You can have now a zone there, and this zone can be a zone that is, can call it a support zone, holding these prices. And market can bounce off from this support zone, trade back here to see maybe break or sell from the zone, break this zone, and you can have something like this. It's possible. So you can have smaller zones on smaller time frame, but keep in mind that zones drawn on higher time frame are always stronger, and the market is more likely to respect those zones. Now it should not be as if maybe I'm just pulling out a particular chart that I've already studied and is good. You can check other charts like USD JPY and see that zones, to draw a zone is very easy, and it's easy to spot, easy to identify, and the market always respect these zones. So let me go to IC market. Yes. Now, okay. Wow. Now this is USD JPY, and as you can see here, we have a zone here. We have a zone here. We have a zone, a support zone that buyers are there. We have a zone here. You can see this. That market has break out from this zone. You can call this a neckline because this is a double bottom pattern. If you know how to trade pattern, this is a double bottom pattern. So you can call it a neckline, but it's a resistance zone because sellers were here and they have been pushing prices down. You can see here. So the market break above this level, and what are we expecting? That the market should come back, retest this level, and this resistance zone automatically will become a support level. Retest this level, and the next zone to target is this high, that you can call it a resistance high. So this is a new resistance zone, and this one now becomes a support because we are expecting market to come back, retest it, and this becomes a support, and this is a next high that we are targeting. So this is just a very simple trading strategy that you can use to make money. Study it, backtest it, and as a beginner, as I'm explaining, it seems as if it's easy to identify and to trade it until you start trading support and resistance. I'm not scaring you away, but I'm just telling you that you also need time to master it very well, because you cannot just get good at trading support and resistance when you from your first month or your second month or your third month of trading support and resistance. You need to have experience on the chart. So this is basically how to draw support and resistance zone, how to trade them, and the logic behind support and resistance zone. Thank you for staying to the end of this video. Please, if I've added value to you, don't forget to smash the subscribe button so YouTube is going to recommend my videos to other traders just like you, and follow me across all my social media platforms. I always drop tips on trading. See you in the next video. Thank you.